Good night. I am Tamara Morris-Lawton, and I will be doing this tutorial for you for problem 5.1a, part level submission. I will begin by looking at the question. So, Winter's Hardware Store completed the following merchandising transaction in the month of May. I will be doing the first part, and the first part asks to journalize the transaction using a perpetual inventory system. Remember that the perpetual inventory system is where a company would record inventories as they purchase or as they sell them so that they are able to track their inventories on a daily basis, while the periodical system means that they would look at it at the end of each month. So the first transaction happened on May 1st, where they purchased merchandise on account from Black Wholesale Supply for $8,500. The terms 110 and 30. That means that if they pay within 10 days, they will get a discount of 1%. Not they pay the net of any allowances or returns at the end of 30 days. So on May 1st, Winter's Hardware Store purchased merchandise on account from Black Wholesale. So we would debit the inventory account with the $8,500 and credit accounts payable with $8,500. On May 2nd, they sold merchandise on account for $5,000, terms 2, 10, and 30. This means that 2% discount would be given to them if they pay within 10 days. So they sold this merchandise on account, so they would then debit their accounts receivable because they expect to receive this money. They debit accounts receivable with $5,000 and credit their sales revenue with $5,000 because they have now earned that sales revenue. We also have to do a second entry into to record the cost of the merchandise sold, because remember, they purchase the merchandise for a certain amount and they sell it for a profit. So the cost of the goods that they sold was $3,750. So we would have to then debit the cost of goods sold account with $3,750 and credit the inventory account with $3,750 to show that that amount was sold. On May 5th, they received credit from Black Wholesale Supply for merchandise returned for $600. This means that they were not satisfied with some of their goods, so they returned the goods to them and received credit for $600, which means that they wouldn't have to pay $600 of the total amount that they earned. So we would then record this. We would show this. They would debit the accounts payable account with the $600 and debit the inventory account with $600 to show that they gave that amount. On May 9th, they received collections in full less discounts from customers billed on May 2nd. So remember, on May 2nd, they sold goods to customers worth $5,000. The customers didn't return any of the goods, so they paid less the discount of 2%. Discount was $100, and we subtracted that from the $5,000, which means that the customers only paid in $4,900. And so we would debit the cash account with $4,900, debit the sales discount account with $100, and credit the accounts receivable account with $5,000 to show the full amount that the customers would have bought the goods for initially. On May 10th, they paid Black Wholesale Supply in full less the discount. So we remember that the initial purchase was for $8,500. They returned some of the goods for $600, so what they would have to pay back Black Wholesale would be the $7,900. From that $7,900, they would then apply the 1% discount, which would total $79. So the total amount that they would pay Black Supplies would be $7,821 in cash. So first we would debit the accounts payable account with the $7,900, credit the cash account with $7,821 that they would have paid in cash, as well as credit the inventory account with the $79 to reflect the discount that they would have earned. On May 11th, they purchased supplies for cash for $990. Now remember that supplies is not merchandise. It's not goods that they're going to sell. Supplies is what they buy to use in-house. So we debit their supplies account with $990 and credit their cash account with $990. On May 12th, they purchased merchandise for cash for $3,410. So, excuse me, we debit inventory with $3,410 and credit the cash account with $3,410. On May 15th, they received a $253 refund for return of poor quality merchandise from supplier on cash purchase. So the purchase that they made on the 12th for $3,410, they returned some of the merchandise because they were not happy with it, and they received a $253 cash refund. We reflect this on May 15th. We would debit the cash account with the $253 and credit the inventory account with the $253 to show the amount of goods that would have left. On May 17th, they purchased merchandise from Wilhelm distributors for $2,500 under the terms 210 and 30. So they purchased it on account on May 17th. So they would debit the inventory with $2,500 and credit accounts payable with $2,500. On May 19th, they paid freight on the May 17th purchase. The cost of the freight was $275. And remember, when they pay for the goods, when they pay for the freight that is shipped to them, the goods that is shipped to them, they apply that to their inventory account as well. And so on May 19th, we debit their inventory account with $275 and credit their cash account with $275, and that reflects excuse me, that reflects the cost of the freight that they paid for. On May 24th, they sold merchandise for cash for $6,050, and the cost of that merchandise sold was $4,510. So on May 24th, we would reflect the cash that they received from the customers of $6,050 for the merchandise they sold them, and we would credit the sales revenue account to show the increase in sales of $6,050. We would then have to make another record in the cost of goods sold and inventory accounts to reflect the goods that they would have sold. So the cost of the goods that they sold for $6,050 was $4,510, and so we debit the cost of goods sold account with $4,510 and credit the inventory account with $4,510 because they would have taken that amount out to sell. On May 25th, they purchased merchandise from Class Inc. for $880 at the terms 310 and 30. So they purchased on account on May 25th. So we will debit the inventory account with $880 and credit the accounts payable account with $880. On May 27th, they paid Wilhelm distributors in full, left less discount. So remember that on May 17th, they purchased merchandise from Wilhelm distributors for $2,500. They did not return any of those goods, so we are only going to deduct the 2% discount. The 2% discount is $50. So on May 27th, we would show that accounts payable, the total cost of the goods was $2,500. However, they received the 2% discount, so they paid cash $2,450, which is less the $50 discount, and they would then credit the inventory account with that $50 discount that they would have earned. On May 29th, they made refunds to cash customers for returned merchandise of $135. So customers were not pleased with some of the merchandise that they bought, and so Winters Hardware then returned the money to them Winters Hardware would then have to receive these goods, and so instead of crediting the sales revenue account, they debit a contra account, which is the sales returns and allowances account, which shows that they would have had goods that would have been returned to them. This they would reflect in the income statement account when they're calculating the net income, and they would deduct this from the sales revenue. So they debit the sales returns and allowances with $135, credit the cash account with $135. They would then record this return in the inventory account. They would debit the inventory account with $91 and credit the cost of goods sold with $91 to show that these goods were returned. The last entry is on May 31st, where they sold merchandise on account for $1,408 on the terms N30, and the cost of the merchandise sold was $913. So we would debit accounts receivable because this was sold on account. Debit accounts receivable with $1,408. Credit the sales revenue with $1,408 and make the second record to record the cost of the goods sold on account. So we would debit the cost of goods sold with $913 because that was the cost of the merchandise that they sold. And we would credit inventory with $913. I hope that this tutorial would have been of some help to you. You can post your comments with tips, if there are any, to help me to improve on my next tutorial, or questions if you have any, and I will do my best to answer them. So I'm going to submit my answer now to see if everything is okay. Forgot to do that. Yes, everything is fine. So again, as I said before, you can submit any questions if you have any, or comments if you have any, to this link. Thank you.